Good morning, folks, and welcome back to Almus Market Mornings. Now, picture this: you're in the lush foothills of Sintra, tile-roofed villas, citrus trees, maybe a pastel de nata in hand. But instead of the holiday chatter, you're hearing central banks speak echoing of the hills. That's this week's backdrop as policymakers gather for Europe's answer to Jackson Hole. No flip-flops and beach towels here, but some very important insights into what the top central bankers are thinking. While the tariff negotiations, as well as the big beautiful bill status in the Senate, still remains market focus, I feel these central bank discussions are also something important which needs to be thought over. Good morning, JK. Just a question for you. This time around, we saw a special mention of the Euros rally by these top central bank chiefs in Sinatra. Any key takeaways for our listeners?
Good morning, Swaraj. Yes, however attractive the setting may be, I think a lot going on the minds of central bankers and preoccupied with what's ahead as a policy, what the global financial atmosphere is going to be, particularly in the context of uncertain U.S. policies. And Europe in particular has now something to grapple with, that is the strength of the euro. And one of the members actually mentioned that up to 1.20 is their toleration limit for the euro strength. So definitely monetary policy is the most in minds of all the authorities gathered there. And from European side, we have too often heard about elevating the stature of the euro as an alternative to the dollar. Lagarde spoke about a huge amount of uncertainty and unpredictability, but the big change will happen, in the future. And obviously, Europe wants to attain its place of alternate to the dollar. And of course, if you look at the other central bankers, what they would be wanting is Europe to create a good atmosphere of liquid market to invest in, and stable policies, of course. And this is what I think that will be transpiring between the authorities who are gathered there. Yes, euro hit a new cycle high yesterday, and of course, consolidating now. There's some slight bit of correction in the euro or perhaps on the dollar itself that happened after US data, particularly on the JOLTS, the opening data. The JOLTS number came much stronger than last month, and in fact, stronger than what was even expected. 7.77 million jobs was what was mentioned, and even the quits rate has increased. From 3.2 to 3.3, which means the employees are feeling more confident about quitting the current job and finding a new one. So that's an improvement that has shown up even in the ISM manufacturing, which is closely followed for indication of economic activity. It rose from 48.8 to 49, still in contraction territory, but at least it seems to be stabilizing. But once again, the ISM also showed the employment index being down. Some sort of reason for markets to buy back some dollars. As I said yesterday, dollar has been continuously getting sold while U.S. stock markets have been performing extremely well. Nasdaq and S&P particularly have hit a new high. Dow yesterday again made another 400 points advance, while Nasdaq slipped for out of profit taking and a few other political reasons that was dropping. On the euro area, of course, we had the inflation which inched up from 1.9 to 2%. It contrasted with the German inflation, which was actually coming down. But it is given that in July, ECB will not be changing the policy rate. Perhaps September will be up for discussion, depending upon how the situation moves along. But to be candid, the services aid inflation in Eurozone is still a cause of worry for the policymakers, which remains high around 3.3 to 3.5% and well above their target. So I think the ECB policy is something that we'll have to watch out for going forward, whether they will stop and if the fiscal policies or the fiscal spending comes about, whether they will be hiking rates or not. Otherwise, we had yields which also jumped in U.S. market after the data that led to most currencies taking a slight hit on the downside. Even the Asian currencies like Chinese yuan, which had almost hit 7.15, now is trading above 7.16. Yes, now all the focus is on lead up to the employment data and also the tariff related matter going forward. Now, on the tariff, Trump has said that there will be no chance of the date being extended for reciprocal tariff. While Treasury Secretary said that countries should be aware that they may still face the tariff rates that was announced on April 2nd. So that is probably a kind of coercion for the countries to come forward and negotiate and fully to the satisfaction of the US authorities. We do not have a clear picture of how much progress has been made, but different countries are in different stages of negotiation. Latest what we hear is that there may be no trade will deal with Japan. 30% tariff will continue on Japan. So there are various varying versions that we are hearing about the tariff in bits and pieces. So not clear. The most source of uncertainty, and of course the jobs data, which will be preceded by ADP number today, jobless claims tomorrow, which has been on the higher side, and then of course the job losses or the we have one more data on the job losses, which will also count into the overall job market health. So market is looking forward to these two important events, and that's the reason why markets will be consolidating. As I said, stock markets already having hit a new high, will be consolidating. Dollar, while there are calls by many people towards 120 and above, I think as I already shared, the technical picture looks a bit stretched, and RSI on the weekly side is at one of the highest levels that in the past 10 years that I have seen, as far as the euro is concerned. So possibly we see pullback, nothing to change the underlying trend, but that is my call still, although near term we don't have any trigger for that reversal. Perhaps these two events of tariff and unemployment report can give that to the market. As far as the rupee is concerned, while it did get some breather from the dollar's weakness overall, but once again, at below 85.50, we saw good buying by leading PSU banks, and perhaps this is presumed to be on behalf of the central bank. Central bank has a good amount of forward liabilities maturing in the month of July. Market thinks that they could be mopping up dollars to meet those commitments and bring down their forward dollar short positions. But rupee overall, I would say, has been an underperformer related to the major and the Asian peers. But that could be for some time, because we have not had big inflows as well. Apart from the IPO related inflows, we have not seen many major inflow for the rupee. So we could be in a kind of balance. Any global related big moves will be short-lived, and we really, hinge upon the flows as far as the rupee is concerned. So that I think is elusive for the time being. We might once again inch up closely towards 85, 80 or 86 before we reassess the situation based on how the tariff and also the trade deal with India progresses, where according to some reports it has reached a very crucial negotiation part. So all in all, we are waiting on our hands to get the next direction move on the dollar and also the overall markets, which have hit a new high. Thank you.
Thank you, JK. And I think from the Sintra meeting, it seems the European chiefs are tracking 1.20. It seems to be an important level which these members are thinking about. Lagarde also spoke about the alternate to being the dollar in the future, which may require which may require an environment that needs to be specific environment that needs to be created to make it happen. We had the data, George data and ISM manufacturing data from the US yesterday. Euro hit new highs against the dollar before retracing a bit after the jobs data. US yields also moved higher. Today it seems dollar is trading a little bit stronger. So that's the broad theme we are going into. For rupee, we saw good dollar rupee saw a good amount of buying below 85.50. The central bank has good amount of short forwards maturing in July, hence there seems to be a dollar buying to cover that. As of now, remains range bound and waiting for global cues. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.